everyone, good morning and welcome to Market Fatafat right here on ET Now. I'm Ahvan Dabash. Well, the markets are certainly looking very upbeat in trade today as we scale those all-time highs, and that was something that we were just about aiming to do this week, given that every day we were hitting a new milestone. So as we speak, we're comfortably at that level of 11,740. The Sensex is well perched at record highs at 39,200 levels. The broader end of the market as well has surged quite smartly. The currency continues to remain fairly supportive, and you've got a number of factors as well that have led us to this point. The fact that crude oil prices have been fairly supportive, FIIs have been pumping in money. There has been some sort of a headway made with the China-US talks. You have the currency that has been supportive, and of course that pre-poll rally. The fact that there will be some sort of a clarity when the upcoming election verdict is out is what is helping this kind of a momentum in the equity markets. Very healthy market breadth, support coming in from all quarters, and since the last time that we hit this level, or a record high level of 11,760, we have seen quite an interesting move vis-a-vis the rest of the global markets. The way gold has performed, as well as Brent, which has been down nearly 8%. The dollar index has gained about 2.6%, with the rupee strengthening nearly 2%. But let's hear it then from market veteran Ramdev Agarwal of Motilal Oswal, and he believes in the power of compounding. He gives it utmost importance when it comes to portfolio allocation. Here's Ramdev Agarwal talking about his advice to budding investors. You don't want to miss it.
Now, fortunately, there are so many avenues. There are so many good managers for 1.5%, and now from today, I think SEBI is beaten down for the cost of this thing. And the best is that you get ETFs for 20, 30 bips, 40 bips. So index funds you can buy. So first is the allocation. You must learn what is the power of equities, and that you can learn at the age of 20. You can learn at the age of 50. See, आप डरते रहोगे. See, it's like learning swimming. If you keep fearing that water, that this water is going to engulf me, I'm going to drown, then you can never do it. Because see, if you can't see a temporary loss, quotational, so-called quotational loss, you put a crore, and if you can't see it going down to 90, 95, or maybe even 85, 80, if you are really unlucky, at the moment you buy, it goes to 80. If you can't see that, then you don't belong to the equities. That's the one thing. And this second thing is timing. Like, I want to be buying absolutely at the bottom and selling every time at top, and I should be every time knowing the market. Market is my, I mean, I am the master and market will be like a servant. It is just the other way around, that you are the servant and he is the master.
Market is always the king.
Market is always the king. So, but it takes a lot of time to get, actually it is much easier talking than actually getting reconciled.
Pearls of wisdom there from ace investor Ramdev Agarwal. But let's move right on and kickstart Market Fatafat. We have with us Soumya, Kunal Bothra and Gaurav Ratnaparki joining in. Well, let's kickstart the countdown with the news that's just come out a short while ago on your screens. This is pertaining to Amara Raja, where the Gala family and Johnson Controls have terminated their pact. Now, this is an agreement that the company had, and this is now with effect April 1. They have said that, the intention, Johnson Control PLC has announced the intention to sell the power solution business, and consequently Johnson Controls as well as the Gala family have reached an agreement whereby they are going to acquire 2% equity shares of the company from JC and terminate the shareholders agreement. Remember, they have been undergoing some technical assistance agreement over the in the year 1997, and it fully absorbed all the critical technologies. There's a wide range of batteries today with the most advanced product and process technologies. Well, that's the latest development. For now, though, the stock is continuing to hold out at 724. We will delve deeper into this story in moments from now. Moving on to stock number 2 then, and let's talk about Raymond and how that one's shaping up in trade today. Firm on the charts. What is your advice, Kunal?
So yeah, firm on the charts, steady in terms of price patterns, and also in terms of volumes. In the volumes so far, and we are talking of not even the mid-session for the day, the volumes have surpassed the last 10 days or 8 days of average, and even the highs of the last 8-10 days. So that itself goes to show that the stock has shown some good volume patterns today. The stock is up, I think 1.5 or 2%. I believe that Raymond could be good hold. The stock is above its 200 moving average. So keep 800 or 798 as a stop loss, and hold on to the stock price for Raymond, and I expect the stock to head towards 880, 885 on a positional basis.
Alright, keep an eye out. That's the level coming in on Raymond. Meantime, can't help but talk about the index itself, Gaurav. We move from strength to strength, and finally that pre-election party seems to be very much on the Lal Street. Question is, are we likely to see some sort of a consolidation kick in from the current levels, or do you think that the charts are indicating that there is further headroom, that the price pattern on the Nifty is looking positive?
Yeah, consolidation basically is very much likely. The Nifty has seen quite a sharp rally over last few sessions. The early chart shows that it was a well-channelized rally. However, the short-term momentum indicators are now showing negative divergence, which means that a higher high in the index is not being confirmed by momentum indicators. So there is scope for the index to cool down a bit, and unless the all-time high of 11,760 gets taken out on closing basis, there is scope for a short-term dip back to 11,550, 11,600.
Alright, watch out. That's the latest coming in on the index. Let's move right on then to stock number 4. And it is Jet Airways, which is continuing to remain rather grounded, if you will, in trade. The crisis continues as now the company has lost nearly 6 more aircraft. Let's take it across then to Utkarsh, who joins in with the latest developments. Utkarsh, fill us in with what exactly the lenders are saying. What is the situation when it comes to the pilot's pay?
Well, it's a dangerous situation to be honest here, because what has happened is that the money from the lenders which was supposed to come in last week has not come yet. This week is, we're already talking about Wednesday. Now there's an important lenders meeting which will happen tomorrow. So the expectation of the money coming in tomorrow is also, a little bleak. What is happening in the meanwhile is that every day the planes are being grounded. At this point of time, what we are being told is that there were 29 aircraft as of yesterday afternoon. Today the number can really increase, and the bigger problem here is the fact that they are flying very dangerously close to that 20 aircraft mark of breaching the international license. So you need to have 20 aircraft if you need to fly internationally, and if that license goes, there's a whole procedure to get that license back again. So that is one bigger issue with Jet Airways as we speak. Secondly, what is also very important here is the fact that as the number of groundings there are, will the amount of emergency funding be enough? Is 1,500 crore rupees really enough for at a point of time when almost 70 aircraft of the company are grounded? And that is also what the lenders will be talking about tomorrow. What we have been told is that there will be one looking forward for the fact that the whole circular of the whole plan of resolution was built on the Feb 12th circular. Now, with the Supreme Court order, the Feb 12th circular is no longer valid. So, will the conversion of debt to equity at rupee 1 still hold? So, that will be one thing which the lenders will be looking at on the legal side of it. So, to play safe. Secondly, also very importantly, the lenders will also look at the fact that whether 1,500 crore rupees is enough, given the fact that there has been so many groundings.
All right, thanks very much, Utkarsh, for giving us all of those details on Jet Airways, and that, of course, is having a rub-off effect on the stock price, which is down in trade today. But let's move right on then and focus in on heavyweight from the oil and gas pack, and that is Reliance Industries. In fact, the latest with respect to Jio is that Reliance Jio has transferred the control of its fiber and their tower arms to two infrastructure investment trusts, or InvITs, and this is set up by wholly owned units of Reliance Industries with the aim of deleveraging their overall balance sheet. So Digital Fiber Infrastructure Trust and Tower Infrastructure Trust have acquired 51% each in Jio's fiber and tower units. Morgan Stanley believes that this move, the asset transfer move, is going to lead to significant deleveraging of the balance sheet. 1394 on this stock has been quite a support so far. But let's move on to metals then, and we've been talking about how there's been quite a pickup of interest. You've been betting big on Hindalco and now it's JSW Steel on your radar. Kunal, is this a blanket call on the metal space, or you're being fairly stock specific?
No, I think being stock specific, so Hindalco was one of the stocks which we preempted as a breakout. The stock gave a fantastic breakout of this 205, 207 barrier and moved up significantly higher post that. SAIL was the other stock, but now I believe even JSW Steel is showing signs of similar sort of a breakout. 293 to 295 has been a sort of an ugly range for the stock, and it's been unable to break that resistance barrier for quite some time. But I believe that with the other metal stocks looking pretty strong, I think it's a matter of time that even JSW Steel could cross this resistance band. So I believe that should be one of the stocks into traders' radar. 293 to 295 band is a big breakout band for JSW Steel. If the stock breaks out of that, it should propel to almost 310, 312 in a very short span of time. Keep a stop loss of 280 on the trade.
Keep an eye out. It's stock specific JSW Steel as well on the radar. Meantime, Indiabulls Housing is a stock to watch out for. You're seeing quite a bit of traction that's been building up, and not just today. While it has been volatile, it has the undertone, Gaurav, seems to be fairly positive. From 889, where do you see the stock headed?
Yeah, that's right. Basically, the stock has rallied significantly from its February lows, and it has now reached near the hurdle zone of 880-900, from where the stock reversed multiple times during November to January period. And this time around, the junction of 40-week exponential moving average and weekly upper Bollinger Band is also around the same level. So we need to see how the stock behaves around these hurdles. And if at all it again fails at these hurdles, then there is a high probability that the stock can come back to 800.
The latest coming in on Indiabulls Housing. Meantime, Samya, the latest on Suzlon.
Well, this is the stock which is gaining for the second consecutive day on ET Now exclusive, wherein what we gather from the sources that Sun Pharma's Dilip Sangvi is in talks with investors to pay or exit his stake in the company, and is aiming to move away from non-core pharma business as well. What we learned is that he's in talks with financial and strategic investors like Singapore-based funds and other renewable majors, and there have been talks that a lot of investors have shown interest in buying specific assets. So this is stock gaining for the second consecutive day, backed by robust volumes.
Yes, that was the ET Now exclusive. A penny stock there, Suzlon at 7 rupees. On that note, time for a short break. Come right back. Lots more to be that we'll flag off when we return. Welcome back to Market Fatafat. It's looking good for the equity markets, but let's keep it with individual sectors, and autos are in focus. And ET Now exclusive is India's largest car maker, Maruti, is taking the lead in rolling out the BS6 cars and getting them on the road well before the deadline. Let's take it across to Utkarsh Chaturvedi, who joins in. Utkarsh, by when is the launch expected to happen?
So in fact, the final date of the launch or the month of the launch is not yet decided, given the fact that the market is so bad. So earlier the plan was that the second quarter will start seeing the BS6 vehicle being launched in the market. It will be the petrol version. But that, still is on the drawing board, given the fact that you all know that once the BS6 vehicles come in, the prices will go up. And in a market like this, no car maker really wants to take that risk. But with Maruti, the problem is they have a very large portfolio. They're almost selling 1,40,000 cars every month, and they have to replace all the stock with, the new BS6 product. So they'll have to start doing it by, maximum third quarter this financial year. What we have been told is that it is by next month they'll start producing BS6 vehicles. So the production will start, the prototype testing will start. What we're being told is that in May last week, and by October, December, either it will be September, October, or October, November is when the first BS6 vehicle will be launched. Speaking of the other players, now we have spoken to the other players also to get a sense from them that by when can their production come in. Now, interestingly, they are waiting for Maruti to start with the pricing, because they believe that, once Maruti sets the benchmark of how much of a price hike will be taken and how much of a price cut will be taken, price hike will be absorbed by the players. The other players will really act accordingly, but obviously everybody has started working. But what we're being told is that it will be the petrol models of Wagoner, Alto, Celerio, which can, hit the ground running as soon as, either the second quarter, ending, or the third quarter first week by Maruti.
Very much, Utkarsh, for getting us that exclusive information. The PS6 cars and Maruti seems to be the first on the block, decisively above the 7,000 mark as we speak. But let's keep it then with the news within auto anchs as well. And Amara Raja in focus as the Gala family and Johnson Controls have terminated the pact. Let's take it across to Ajay for more perspective. Ajay.
Well, Avan, what is important is that the news which just came in the exchanges filed by Amara Raja is that they have moved out of the tech JV which they had earlier. Now, the stock has cooled down almost 2% from day's high because when in October 2018 they had given out the exchanges that this tech tie-up will lead to further strategic collaboration going forward. And remember, Johnson Control holds 26% stake. It started giving an impression to a large section of the market that going forward, the ownership could perhaps go to over 51%, and this collaboration will also lead to a big transaction on the equity side. And now, for some reasons which they've not clarified very clearly in the press release, both Amara Raja and Johnson Control have moved out of the JV. So to discuss it is very important. Bhavesh Chauhan is here. He tracks the space closely. Bhavesh, what do you make of this? Do you think it is just a disagreement which has happened and because of which the JV has fallen through? Or you think this could be a bigger transaction also in the offing, and the 26% which is held by Johnson and Amara Raja could also, be getting reversed going forward?
This intention by Johnson Control was already clear, and this was way back in November 2018 when they said that we want to move out of our power businesses, and Brookfield had entered the global company. Now, as far as termination of agreement is concerned, couple of clarities are missing. That one, who will buy the stake of Johnson Controls, which, as you said, that they hold 26%. So that clarity is not there. Apart from that, the important thing was about technology sharing. So, as they said in the press release, that Amara Raja has already absorbed most of the technological know-hows from the company, and now they don't need any technical support. At the same time, Johnson Control has said that they will continue to support for, I don't know for how long, they have not clarified in the press release, that they will continue to support for any technological advances here on. So in the near term, we don't see any impact on the company as such. At the same time, we'll have to monitor what is going to go. I mean, how Johnson Control will exit this JV.
Also, what happens to the electric vehicle related batteries, ambitions? Do you think that will also hit a speed bump? What has happened because of that?
See, for electric vehicle, I think that's a very longer term thing. In India, at least, next 10 years, we don't foresee anything significant happening in terms of volumes of batteries for electric vehicles. In that period, Gala family, the main promoter now, will look forward for technology sharing from some other giant. Maybe there could be many options from Japanese to Chinese makers. So there is a long time to go. So I don't think that electric vehicle batteries mission will have any problem.
All right, Bhavesh, thanks much for joining in, and Ajay as well for taking us through that news and what exactly it means for the company. In fact, Kunal would like to get in a technical take. The stock has cooled off quite significantly. What is your technical analysis on Amara?
So it's been a clear underperformer, Avan. In the best of the markets or in the best of the market trends, if a stock is not able to kickstart its trend, come out of a big range, and on slight weakness or slight news, you see the stock dropping back and hitting or coming back to their previous swing lows or even the 52-week lows. I think that's a clear sign of weakness, and which is why I believe that the stock could remain into an overhang, even going forward as well. Lack of volumes, the indicators are also absolutely sideways for Amara Raja Battery. So I believe that the stock could remain in a bit of a limbo going forward as well. The nearest support for the stock is now closer to 700 or 690. I think if the stock breaches that, then it could trickle into a sort of a aggressive selling pressure post that.
All right, quite an underperformer it has been today as well, as no exception. Now the stock is taking a further nosedive, and as we speak at the lowest point of the trading day, 0.6% off on the back of that news. Meantime, Kunal, let's also get in a take on HCL Technologies.
So, Avan, most of the IT stocks are trying to make a good comeback. I think the last 3-4 days we've seen HCL Tech showing some good price volume patterns. It's now broken a decisive swing breakout around that 1120, 1115 mark on spot levels, and I now believe that the stock should be heading up higher. So on one hand, when you see the Nifty IT index still struggling, I think HCL Tech can slightly outperform that index. From a short-term view, I have a target of 1160 and stop loss to be kept at 1100.
Okay, that's the level coming in, and the stock is well spiking up. On that note, Gaurav, Kunal and Soumya, thanks much for joining in on this leg of Market Fatafat. Stay tuned, we've got markets at noon coming right up.